be able to process accounting transactions. So let me write the accounting equation for you. So the accounting equation goes like this. Assets minus liabilities is equal to owner's equity. This is how accounting equation is. I will get back to study guide. I just wanna study guide, you have it as assets is equal to, I think it's liabilities plus owner's equity, which is still fine because here we are just trying to make it also align with the debits and credits. But in actual fact, this is how accounting equation is, because with an accounting equation, we are trying to determine the owner's equity. This is the purpose of financial statement, to determine the owner's equity. And what is the owner's equity? Owner's equity is the owner's wealth. In a business. So we need to, in an entity. So we need to measure the owner's wealth. So I'm starting from scratch because sometimes the confusion with these debits and credits, it comes from the basics. Like maybe because you didn't get the basics right, that's where now sometimes when you have to deal with debits and credits, you sometimes get confused. So what makes the owner's wealth? Owner's wealth is made out of capital, which is initial investment. And also and it's also made out of profit, which is that will be generated by the business, which is income minus expenses. So maybe if you want, you can just I won't see it because I'm sharing, but for your own sake, I think there are emojis there because I want to ask you a question. If your answer is yes, you can answer with an emoji, maybe a thumbs up or a thumbs down. But maybe I will see it later. Because what I wanted to, I don't know if the emojis will show here, to say, have you ever done financial statements for yourself, for your persons, just your personal? Some of you will think that you haven't. The assets minus liability, if you've been to the bank to borrow money, like let's say a bond or a car, they want to know how much are your assets and how much are your liabilities before they can give you. So this is something just that sometimes they don't make you do it. They ask you questions and then they do it for you. And they say maybe print your bank statement. But I don't think there's somebody who has not calculated profit for himself or some sort of a profit. Because whatever income you get, you minus expenses so that you make a decision, which is something that is standard. Almost all of us do, because you can't do without deciding what I'm gonna buy first. So maybe if you've got 500 rand, you'll write things that maybe you normally buy per month, and yeah, you'll say maybe your monthly expenses, it's maybe meat, it's noodles, it's whatever. So you are based on your income minus your previous expenses. So this is more of the same thing that we've done before. Then I want to also deal with Now, how do we then put it for the sake? I've already put it here to say this is how we normally write the accounting equation. So for convenience so that debits goes with debits and credits goes with credit. So assets are a debit. But sometimes, not sometimes, most of the time, students ask me, how do I know whether is this a debit or is this a credit? So if it's an asset, it's a debit. If it's a liability, it's a credit. And now these things are called easily because now it's accounts payable, accounts receivable. It's easy to distinguish. Back then, it used to be accounts, it used to be creditors and debtors. So it wasn't easy to digest that. So these are a credit, owner's equity, the owner's wealth. So these are a credit. So the owner's wealth is a credit. So now, even if income will be a credit because it increased on the owner's wealth. So this will be a credit income when we are calculating profit. But are the expenses going to be credit? No, they're going to be debit because this is reducing the owner's wealth. So I'm still going to come back to these things. So just that I always keep on hammering on them while I'm still here. So let's also deal with these concepts. So this is going to be a debit because it's an opposite of income. Now, so this is the accounting equation. When you do accounting, you have to decide. You'll need to write it down like this if you prefer. But there are golden rules in your study material which says assets increase on the debit side, they reduce on the credit side, liabilities increase on the credit side, they reduce on the debit side, and so on and so on. Now, when you decide with the transactions, normally you decide it because whether is it an asset or is it a liability. You don't start deciding as to whether is it owner's equity because the owner's equity is the remainder. So yeah, it's the remainder. It's the residual. So these then are the basics of the accounting equation. Then before I start I will as time goes on. So I will give you these notes, but I will read what is important to say. So accounting are prepared on an accrual basis, meaning it doesn't matter whether something has been paid, but as long as an expense has been incurred, then you recognize that expense, meaning you can stay at a company can stay in its operation, like in its rented buildings. As long as it stay there for a month, there is an expense. It's an expense, even though they haven't paid it. So there is accrual basis. Then also, then now I have to separate because sometimes you are asked to distinguish between non-current and current assets. So just is it recording?
It is recording.
Yeah, just say that's why sometimes I do automatic recording. So what are current assets? Current asset is what an entity expects to realize or sell in its operations. So sometimes, maybe for an example, a car, this used to be called fixed asset. It's a non-current asset for a tuck shop. But for a car dealer, it's stock, so it's a current asset. You see, also, when it expects, so it holds for trading, like what I was saying to say, if a business is selling cars, there is this trading stock. If it's selling houses, there is trading stock, and it expects to sell within 12 months. So it's a current assets, but non-current assets would be like used to be your fixed assets, your delivery van, the equipment that you are using to generate money, not what you are actually selling. Now, what is your non-current liabilities? It's like your mortgage bond, the one that you can pay off in more than 12 months. But your current liabilities are the ones that you need to settle within 12 months. Also, as part of your normal operating cycle, if you normally uh, buy you buy groceries, you have a tuck shop, then this is your normal, it's your stock. So this is your operating cycle. That's what you use to operate. So now, because so now there are exercises that I would like us to do. Yeah, there are exercises that I would like us to do. These are in your study material. That is in your official study material. But I want to start with those that normally try to determine the owner's equity, because owner's equity is what I would like to emphasize to you. Like here, this business, I think this is exercise 1. In its bank, it's got 4,000. And then 5,000 vehicles, 7,000 equipment. So if you want to determine the owner's equity, you're going to have assets. Asset is going to be this 4,000 plus 5,000 plus 7,000. So these are assets. Minus liabilities. How much are liabilities? It's 0. So here we're supposed to determine capital. So these are the important basics. But this is what sometimes makes students, if you can master these basics, you'll be able to deal with these complex transactions. Then your capital, it's gonna be 16,000. Then let's move on again, where we determine the owner's equity. Tom is the owner of Zebra Services, which offers a carpet cleaning service. On 30 November 20.1, Zebra owns an equipment for 100,000, and clients owe 100,000, 40,000 for services rendered, and Zebra owes 20,000. So you need to show the accounting equation. There's also 10,000 rand cash for Zebra. So assets. So assets is gonna be this equipment of 100,000 first. So these are the basics. The thing that you do in accounting, it's this it expands from this. So that's why it's important that you master these basics. Because in accounting, whether you are even you are preparing financial statements, you are working for a company, it comes down to the question, is this an asset? Is this an expense? If it's an asset, so it means we have to debit it and all that. Those are the basic questions that goes through the career of an accountant. So it's going to be 100,000 plus giants O. So these are trade payables, 40,000. So I just want you to, yeah, these are trade payables. Well, the words are important to say what is what. These are trade payables. Then also for services rendered. And then it owes minus, these are liabilities. which is how much are liabilities? Here are liabilities 20,000. Which is 20,000. Then we have also there is cash in the bank. See, bank. It's already, it says. And so some of the things, it's in the information, you don't have to maybe like interpret. Cash in the bank plus 10,000. So then, so if you say asset, then owner's equity. So meaning owner's equity is going to be 100 is 150,000 minus 20,000. So it means owner's equity is equal to 130,000. So like as time goes on, I will open for questions. So these are the basics I want, because we are expanding from this. You see now, we are dealing with few transactions. Because now the reason I'm doing this is because now we will soon deal with more transactions so that you can see, rather than me jumping to a complex exercise, maybe you might not see what is what. You see, so now this builds from this. Now I want to go to a question that now has, these are more or less the same, which these are more or less the same. Just want to, yeah. So now, then we are moving to a question now that has income and expenses. So that has income and expenses. Just want to, yeah, here it is. Yeah, here it is. But yet, oh, okay, yeah, here it is. The financial position of Terry Penny, and Anthony on 28 February 20.0, it's as follows. So assets is 30,000, owner's equity, it's 20,000, and it's 30,000, and liabilities are 20,000. So we need to use the accounting equation to determine the owner's equity. So in doing that, so it means you will have to first recognize the income received. So income received is gonna be income received was, this is income received. So I wanna build from the basics so that when this thing gets a bit complicated, you can recognize that this is the same thing that you are doing. And then on the expenditure, we have salaries, which amounted to how much? 100,000. And then administration costs, which amounted to 20,000. See, so I'm doing it in the simpler form first, then so that when we deal with it, soon we'll see we will be now dealing with a number of transactions. So this is a small business. And then we have insurance expenses, which amounted to which amounted to 10,000. I'll be moving faster now. Okay. So if you add all these, 100, 120, it's 130. So for income, you have, for income, So for income, you have 130. Oh, yeah, for income, you have 180. Minus the expenses, this is 130. 130. So your profit is going to be 50,000. Just want so that when it gets so now the point of this 50,000 was so that you see where does it fit in of this calculation. So we had at the start the assets is 50,000, equity as 30,000, and liabilities is 20,000. So then this means this 50,000 will increase here. Will increase here on owner's equity. And also because maybe this was cash, it will also increase here. This is double entry. So this is how the accounting equation works. So now I'm then taking you through. We are now going to the exercise now, to the actual exercise, because then I was starting to build on the basics. Now let's do an exercise now. Let me see this exercise that I want us to do. The accounting equation exercise. This exercise. So from this exercise, I don't know if therefore is there anyone who has a question before I move on to this exercise? Therefore, let me see if there are no, I can't take hands. Can you write in the Q&A, or maybe just for this student? Let me see if I can, because we're also trying to save time. I just want to see. Yes, you can ask a question. I don't know, I think it's, but it's definitely not here.
No, I am here, so you can hear me.
Yeah, yes. Well, that's all I want student to ask via ask a question.
Okay, we have Mweketsi Tapela. You can unmute yourself. Mweketsi.
I'm sorry,
Yeah.
sir. I wanted to clarify something. You said the 40,000 that the clients owe is trade payables, but trade payables is a liability. So I think that is trade receivables.
Oh, yeah. Out. Also, what you need to, that's one. Also, you need to, I just want to see it's maybe, yeah. Also, I won't go back there. Also, what you need to know, students, is there to say, I'm trying to be like interactive, to be active, because this thing is already there. I could as well as read it for you, you see, but then maybe you might fall asleep. So I want to write. So when I write, maybe I can forget to add a zero there or just mix words here and there. But you've got it there, and then you said, so I won't go back because it will consume time. Let's go to the exercise then. Let me open the exercise then, so that we can start with this. The exercise, let me have it large so that you can see first. So I'm going to share the screen. This is revision exercise 4.2. 4.82. You say because you say I'm writing and I'm teaching, so sometimes there is gonna be that slip of the tongue. So the exercise is 4.82 that you are doing. So then now I'm minimizing it so that I can be able to read. Because otherwise I won't be able to read some of the things. But so that you don't get surprised as to where does the amount come from. So this here, let's go to the required first before I minimize. So here, analyze the above transactions in a tabular format like this. So assets, equity, liabilities. So like I was saying, that this is how we put it so that it can be convenient for debits and credits. Then let's analyze these transactions then. To analyze the transaction, so you see now, that's why I was building to say, we start with this is what I was saying, that we start with, I was saying that you start with a few transactions. You see now, when there are many, it means you have to analyze them and add them together. So I'm looking for this exercise. I was about to do with you. Now, as I was showing you, I think it slipped. I'll get it now. Let me see. Sure. Let me just unshare quickly while what is this exercise? So I was showing you this thing and the exercise slipped away. Okay, let me see. Sometimes when I try to this just I'd open this exercise for you now and just disappeared. Because I wanted to show you this whole thing. I wanted to show you this whole thing. Just hold on for me a little bit while I get this exercise. Or is it? There is the challenge. Sometimes try to show something and something else, it disappears. It's this one. And therefore you don't have this. Because yeah, here is it. You see, here is it. Here is the revision exercise 2. So you will get it. So now let's start then with how you recognize this. Now you see it's many transactions. I don't even want to just jump to many transactions when I haven't done maybe even a few. So I wanted to start with a few transactions first. Then we move on to many transactions. So yeah, I'm working with what I have. So here, this is the accounting equation. So the first transaction in this business, So this is exercise. That's why I ended up losing. But this is exercise 2. So I have to split the screen. Can you see it, Taco?
Yes, sir. Yes, sir, I can see.
Yeah, okay.
We all can
Let's
see.
start with it. Yeah. So let's start. So now it says Fox deposited opening capital directly into the bank account of the business. So now the question becomes, what normally you must know, most transaction affects assets. So which assets does this affect? It's bank account. The moment they say bank, so it means it affects bank account. Does it increase bank account? It deposit. And also so that you can understand accounting, but there's also the effect of business. Fox is different from his business, you see. So he can do transfers, but this is his transfers to his business. So now this increases bank account. Then as I explained, the owner's equity, this will increase what? The owner's equity, which is the owner's wealth in his business. Because the owner's wealth, it's more like, that's why these are credits, equity, and liability over the account, the equal sign, because the business owes Fox. So business and Fox are two different people, legal entities. Then on paid rent for 2,300 on 20.1. So now here is now the money coming out. How does it affect assets here? So normally you must start with assets because you don't start with liabilities and like with equity. Equity is the residual. So how does this affect assets? So now it you see paid bank, it affects bank. So bank is going to reduce. You see, soon this will have to now do it as debits and credits. So now 2,300. You see, money comes out of the bank. So what else does it affect? On the other side, does it affect equity or liability? It affects equity. It reduces the owner's wealth. As you saw with equity, I did an income and expenses to show that equity is made of capital and income and expenses. So now, that's why this will reduce, it will be expenditure, so it will reduce equity on the income and expenditure, not on capital. Then we move on the next transaction. Brought law books on credit for 23,000. So this, in fact, it's a typing error here. This is supposed to be a library, a law library. So this is a law library, not a law book. It's a law library. So I thought we'd corrected this. So if he buys law books on credit for 24,000, what does it, which assets now for the business increase? Is the land and buildings. So this is a law library. What increase does buying on credit increase owner's wealth? No, it increases creditors. The way to look at this, so it's a plus, increases. The way to look at this is also when you, and also these basics are very important because then when you start debiting and credit, it will be based on these basics. Then there is, the increase in owner's equity. Then, no, in long-term liability, sometimes you see there is a slip of the tongue because I talk and I write. Then also, let's move on to 5. Let's move on to 5. Is it still 4? Yeah. So bought computer for cash from Leo Limited. Most transaction affects cash. What will happen to assets? Firstly, so cash is gonna bought a computer from Leo for 1,700. So cash is gonna reduce. Like when you swipe, cash reduces. Then What's going to happen now on equipment? Equipment is going to increase by 1,000. So this is an asset for asset. Then now we move on now to the next transaction. Provided services for cash. So this is a law firm. Now it provides services for cash. Then they're doing a service, so it means they should be getting money. What happens to bank? The moment they say cash, bank, it comes into the bank. It's equal to 7,200. And also, this affects what? The owner as well. It doesn't affect capital. Capital is when the owner deposits directly. This affects income and expenditure. So he's generating income plus 7,200. And also, once you see, look at the signs. So in case maybe you are a bit confused to say, is the sign going to be a debit, a minus, or a plus? Within the same equal sign, it can be a minus and a plus. You can't minus and minus. Once you skip over the sign, you add it's two signs. So you see it's a plus 7.2, 7,200 plus 7. So the signs have to be the same. Then you move on to the next transaction, which is on 9, which is debited did done with fees for services rendered. You see now, not for cash. When they say debited, it means they did this on credit for did done. You start with asset. Which asset increases? Is it bank? No, they debited. So it means it was a debit transaction, a debit transaction. So that's why now we have to now start analyzing the weights. So trade receivables increased by 8.3. And then what else increased? Owner's wealth, which is 8,318. You see, it's a positive and a positive. Let's move on. Then we have the next transaction. Leo repaired equipment on credit for 100 Rand. You see now we have somebody who's repairing whatever computer equipment for us for 100 Rand. So here are assets. Assets. What if a person repairs an equipment for us for 100 Rand? Does it increase assets? No. What does it increase? It increases, firstly, because now we've created an expense. So it means this is an expenditure. So the owner's wealth has reduced because we owe this person. Then the trade payables are going to increase by 100. Then we move on. Fox withdrew 1, 2, 3, 4 for private use. What happens? You see now withdrew the moment it touches bank, so it means money went out. So does bank increase or reduce? It reduces. 1, 2, 3, 4. Then what else gets affected? Does liabilities affected? No. It's capital because he's withdrawing from his own. So a capital account is the owner's account. So he's withdrawing from his account. Anything that touches has to do with an owner. It deals with the capital. Minus 1. This thing is jumping. 1, 2, 3. It's jumping around. Minus 2, 3, 4. So I wonder why it's doing like this. Yeah. So then the owner's account. Yeah, that touches the owner's account. Then again, let's move on to the next one. Fox, the business, received commission on a property transactions. So these are conveyancers. So they are receiving commission. What happens to the assets? If you are receiving, so receives commission on it, yeah, so this it means they receive the amount. So it's gonna be plus increases bank 1350. And also what happens on the income and expenditure account, you see we're spending now on, that's why we are spending on equity. So it's gonna be 1350. If you've got questions, you could be putting them up on the charts, but that's if you've got questions. Then now we move on now. You see, this is analysis. Make the following EFTs. Make the following EFTs. Salaries. So what happened? Also, all these, they go to the bank because it's EFTs. It's how much? 1,500 for salaries. And this is income and expenditure. Oh, it's why what I'm writing, maybe I can say minus, but I write plus. Also, so it's a minus 1,500. It reduces bank. It's gonna reduce the owner as well. Now it's time to pay employees. See, it's reducing owner as well. He was generating. You see, that's why in fact I was here on 8350. 8350, but you've got this thing right. 8350. And then also he then pays this Leo's account. Yeah, 100 rand. So these are EFT payments. He paid salaries and he paid Leo. So this is the account of Leo. So now, so bank is the account that's always mostly affected. So you must look out for bank. So money comes out, it's minus, what does it affect? It's minus 100. And so then also what also gets affected, it's trade payables, which was this 100 rands for Leo. Gonna be minus 100 rand. Then we move on now on 30. We move on 30 June. 30 January. Let's see what happened. If you've got questions, then before I can move on to the next one, then I will deal with them. Yeah, then on 30 January, there is received payment from D-Dan. You remember D-Dan? D-Dan, it's one of the trade receivables. So he's paying now. So now, also, firstly, start by banking the amount. How much did the business receive? 1,500. From here, we are moving to debits and credits now. I was just laying the foundations with this. Some of you might be aware of this. So this bank, 1,005, trade receivables, now they have to reduce with 1,005. Then, now when we total, it's going to be 25,700. Here it's going to be 6,818. 6,818. And then here it's going to be 16366. So before I move on, are there questions?
So we actually have a hand. We have
yes, we will get delayed, Itzecho. We will get delayed.
Oh, okay.
Let's be compact. Yeah, okay. I think can the student who's having his hand up write it in chats, you see, so that we are able to manage time. It's nice to finish on time. So then, yeah, it's gonna be 0. From here, I'm going straight to debits and credits. If there is nothing on the chart, therefore, then I'll then move to debits and credits.
At the moment, there's nothing on the charts.
Yeah. No, man. Let's do it like that so that we can manage time. So this is now IO, assets, trade receivables, bank equity, and liabilities. Then from here, that's how you then calculate your balance sheet. That's how you calculate your balance sheet. Let me, I will unshare so that I can see if I can be able to open where there is a balance sheet. To open where there is a balance sheet. No, I think you've got it on your. Let me see if I can get it. I can. Let me see if I can get the balance sheet here, so that I just, because this one, the debits and credits, will be taking quite some time. The debits and credits will be taking quite some time, so I just want to reserve that time. This is what was the I'm trying to. I will not here where there's a balance. Oh yeah, now here it is. I want to rewrite it. Okay, why the 100 Rand for repairs had a negative impact on the income and expenses? Yes, definitely. I will come back for that. So this, okay, let me share for you then. Let me share this for you. You see, now, I'm still going to do a proper financial position, so I just don't want to waste time. You see the totals, because now we were having totals. Okay, because now we were having totals. You see this total equipment. It's equipment. Just that it's separated. Yeah, equipment 24,000. So I was saying this was library, and then here is. You see, here is equipment, 24,000. Here is library. You see, this is the non-current assets part. And then for the current assets, here is the balance, which is trade and other receivables. See, these are trade and other receivables. 68, you've got it on your study material, 6818. Trade and other receivables. So it's those who owe the business. Cash and cash equivalent, bank. See, here is bank. Here is bank. It's 1636. Just don't wanna labor on this. 1636. And then you have total assets. Then equity. Equity. Equity, it's 24,618. So you add this 167. once. So you add this 16766 plus 68 what, then you get 24. But 24,884, and then also so like that and like that. So this is your, and then liabilities. So this is the model of a financial position. I didn't want to do it, but I'm still gonna do it. I think today I'm still gonna do a financial position. Or yeah. So, but this is what it is. So just separate assets, like I was saying, its assets is equal to equity and liabilities. So you just separate those two. Like we're building from few transactions, now it's a bit more. So now that you've built on more transactions, now we are now adding debits and credits, which seems to confuse a lot of people. And debits are confusing even if at whatever stage of accounting. Even if you are practicing, debits and credits are still the issue. Now, one student was asking, why? Can you repeat the question for me, Tsakho? Even for our students to remember. I don't see it here.
So you mean the
Tsakho?
question on the chat, right?
Yeah, of 100 rands. So it means you'll check It means you'll check on the chats
why?
and the question and answer, because I think some put on the chats. Yeah. Yeah.
Okay, that's fine. It says why the 100 rand for the repairs had a negative effect on income or expenditure.
Yeah. So this is income and expenditure. So now, maybe I'll call you on anonymous. Who is his name? Who is his name? Anonymous. If they say we are anonymous,
And it's not anonymous. Just hold on for me. It's it's Nakedi. It's Nakedi.
yes, Nakedi. Now imagine, that's why you need to look at this from your own perspective. You see, as a person, how will this affect you? See, so that you can understand. If you take your phone to those who fix phones, what will happen to your cash? It will incur your expenses. So that's how you look at it. See, so the best way of understanding these things is to look at from your own perspective. So now then we are done with the income and expenses. So now we are now trying to. So now that we are done with income and expenses, so now we are now dealing with debits and credits. I'm trying to, Tsakho, do you see what is there should be something floating here that will enable me to. Are you able to? Oh yeah, here it is. So now we are. Tsakho,
Yes, sir.
oh yeah, I was wondering whether I might still here. Here is another one.
Yeah,
Oh yeah, this one. The student is saying, I have had time recognizing what increases. I have
no,
had
that's just
time.
for noting.
Oh, it's for
That's
noting.
for
Okay.
yeah, it's for other students who are finding it hard
Oh
to.
yeah. Oh yeah.
Yeah.
Also, it's a check. It's a check there, students. If you want, you can as well. This thing. Oh yeah, here is this. You can share whatever ideas if you
Mr. Khanyeza, are you still there?
Yeah, Zeko, can you hear me?
Loud and clear, sir.
Yeah, man, I was changing. Now we've just had load shedding now. So, but I'll see if it doesn't give me a problem. If it doesn't give me a problem, like the next class when I know that we will have load shedding, I'll then drive to where. But just really want to go through the trouble. So now let's now deal with let's deal with this exercise now. Let me unshare. Now we are dealing with the next exercise now. Next. Next. Yeah, I think this is the exercise we're dealing with. Revision exercise 3. Okay. Then, yeah, I will open it for you now. We'll open it for you now. Then I have to then open where we'll be dealing with the double entry. We will be dealing with double entry. That is where we will be dealing with double entry. Then I'll open for you now. Because once you understand double entry from the start, it will never be a problem. Here it is. Let me share now. Let me share my screen. Share. So here is double entry now. Oh yeah, I sometimes minimize this thing. Here is double entry. So that how do you know when to debit and when to credit? Size 2. Yeah. Now this is revision exercise 3. You see, we are supposed to do something like this. Decide which account are we going to debit, which account are we going to credit. Is it in asset? Is it crediting assets? We are putting those amounts. So this is how this double entry is decided. So now, yeah, this is how double entry is decided. So now we are going to take it step by step. This one, see. So this is Goodman. I just wanna see if this is the right. Yeah. Now let's do it then. Just that you'll tell me, Tsecho, if students, you say this is an exercise on top. This is where we are doing the work. Now, yeah, it says, I just want you to create a picture as to how does these things all come together. You will also download your study material and look at this in detail. Now, here it says you have to, the required here, you have to record these transactions in this format. So let's start with the first transaction then. G. Goodman deposited as an opening balance. Which amount has to be debited? Also here, sometimes when you do this thing, you need to, this is a debit. This is a debit. You need to, you can, it's advisable to write it so that you don't ask yourself, is asset a debit? So this is a credit. So when you are doing, you need to scribble it down. So this is a credit, equity is a credit. So you don't have to decide. You've got it written already right there. Liabilities, and equity is more like liabilities because this is what the business owes to the owner. And this is a credit. Now, here is the first transaction. G. Goodman deposited as an opening capital 50,000. Which amount will be debited? Which account will be debited? That account is going to be bank. The moment they say deposit, so that account is going to be bank. With 50,000. Let's debit it then. Say 50,000. I don't know, I'll take it slow initially so that you can see. I want to link this worksheet to your ledger accounts, because ledger are very complicated if you don't have the background. So I just want to link this to your ledger accounts. I'm gonna get something here. This is the input. Yeah, you see now, what did we say? We said we're gonna debit assets with 100,000, with 50,000. We're gonna debit bank with 50,000. That's what we are doing. Now let's go. This is the bank account. Let's debit it then, because I want you to see where does this thing fit in a bigger scheme of things. That sometimes these dates are not like relevant, because this is February. So I take this is February 1. So it's gonna be the contract account is capital. The amount is 50,000. If you've got a question, maybe I can answer it, because now we are starting to debit. So, we are starting to. Let me even so that I can follow. Let me delete this so that I don't. So we've debited bank with 50,000. Which account are we gonna credit? So this is the increase in the owner's wealth capital. So we are now crediting capital at 50,000. Because this is how you'll do it. You do it in ledger, not in a spreadsheet. A spreadsheet you are just using to decide. Let's go. So you've debited bank. So the contract account is capital here. And here it is. So the contract account in capital is bank. 50,000. If you've got a question, you can ask. Therefore, will tell me so that I can stop. You see. But these things are repetitive. You see, you'll keep on seeing it. Then now we move to the next transaction. G. Goodman transferred a personal equipment to his firm. Remember, separate Goodman to his firm. So, to his firm, which account are we gonna debit? Start with debiting. going to be equipment, which is how much? 6,000. It's assets. So assets going to be 6,000. So we are debiting. So if already here debit, assets are a debit anyway. So that's why here we are building from scratch. And then which account are we gonna credit? So this goes together. This is the account we're gonna credit, we're gonna debit. Then which account are we gonna credit now? In the business, he's increased his own as well. So capital again. Because Goodman is different from his business. So it's gonna go to capital again, 6,000. So he's increased his own as well. Because this is what the business will have to pay to Goodman at the end of its life. See? So we said we're gonna debit equipment. Let's debit it then. That's how it goes. That's how it goes in the said we're gonna debit equipment with 6,000. So the contra account is capital. 6,000. So the contra account is 6,000, which is the contra account is capital, which is 6,000. And the for capital, the contra account, the opposite account is equipment. Which is 6,000. You see, we are doing what we were saying we're gonna do. See, it starts from the raw information to the accounting equation is a spreadsheet to decide. In fact, that's how we decide. So step by step, it's not part of financial records. It doesn't feature anywhere. So that's why I'm taking to the spreadsheet and then to the ledgers. Then you move on to the next one. Paid rent for February, at which is 8,000. So now, what happens to the asset? Which account are we going to debit? Because we are debiting. If we debit something that's going to increase or reduce. Does this affect asset paid? Yes, it affects. It reduces assets. So it means you have to credit assets, which is the account, the amount that's going to be credited its bank, because it now reduces assets. 6,000 is no 8,000. So now bank is reducing this amount. Trying to just, there's nothing special about these colors, just that I just want you to be able to see what is what. So bank is going to reduce because assets are on the debit side. So since assets are on the debit side, that's why when students ask me, how do you know when to debit? So if you see this thing is reducing assets and assets are on the debit side, so it means you'll credit, which is the opposite side. You say you track where is this? Is it a debit or is asset a debit? Then if it's a debit, when you increase it, you'll debit it. If you reduce it, you'll credit it. Then what else is going to affect? Which amount is going to be debited? Now we're only going to have rental expenses debited. Which amount going to be debited with 8,000? Why is rental expenses debited? It's reducing the owner's wealth. So that's why we are debiting it. So let's start with bank now. We start with credit bank. Let's credit bank. Let's credit bank with 8,000. See now, we are now starting to credit bank. So this is, in fact, this is February 2. So these dates are not accurate. So this is February 2 with 8,000. You see, you are now, this is a debit, a credit. You need to write for yourself here so that you can remember as well as to what is this. This is a credit here. Yeah? And then this is a debit. Or sometimes if you are new to this, you don't remember where is a debit, where is a credit. So on the left-hand side is a debit, on the right-hand side is a credit. This said we're gonna a credit bank. The contra account is rental expenses. This is what we said. See, this 8,000, we said we're gonna credit bank, which is an asset. And we said we're gonna debit rental expenses. Let's look for rental expenses. Let's look for rental expenses. Yeah, so this was so in fact, this is Goodman. I used an old G Goodman. So this is capital for G Goodman. Then now, let's deal with rental expenses. Let's have to get, yeah. I think it's a little bit better. That so the next account, we are opening this account. This is an account for rental expenses. So which we said it's gonna be 8,000. And the contra account is bank. There it is. This 8,000, the bank, the contra account here, it's 8,000. Then we are moving now to the next transaction, which is furniture. So they paid rental. Bought furniture on credit from the Batman. So they bought furniture on credit from B Batman. So these are trade payables. So again here, I'm going to open another account. Because in fact, I can't, so this is furniture. I'm using the old like template. How much was furniture? Oh, no, let's start with here. No, we're starting with here. We're starting with deciding where does this go. Which account are you going to debit here? You're going to debit, it affects assets. So assets are going to be debited with, and mainly you start with the amount, with a debit or a credit. So assets are going to be debited with 12,000. What assets is going to be debited with that 12,000? It's furniture. Because they are on the debit side. And What else is gonna increase if you debit asset? Is equity increasing? The owners not increasing? No. Our liability is increasing? Yes. So liabilities have increased. So their liabilities are on the credit side. So if you are increasing them, you're increasing it on the side where it is. So 12,000. So then which account it is? It's liabilities. And
Mr. Khanyeza,
yes.
sorry to interject. Moeketsi is saying that she said, I think there is a mistake with the second transaction on the ledger accounts because equipment did not affect bank. And Antonella is saying that isn't that the 6,000 if affect the capital account on the credit side and open the equipment account with 6,000 on the debit side balance?
Yeah. Thank you for picking that up. The equipment is not here. I'll have to be slow. And I already even have this. So this affected 6,000. It affected capital, in fact. Yeah, it affected capital. This 6,000 affected capital. Equipment instead of bank. You see, the contract account was right. I said, just that now I'm teaching, so I have to be slow. So you see now, in fact, the credit, I have to be slow. Equipment, the contract account. Because I've got these things written down, but then I don't want to read something that's written down for you, because then you'll end up not knowing what am I talking about. So just want to see else. What else, Zeko, did you say? Did you say something else, Zeko?
Mr. Khanyeza? No, Mr. Khanyeza,
Yeah,
that's just it.
Oh, that's all. No, thank you for that, for picking that up. Yeah, so that's what I'm saying, that I'm trying to make it as interactive, because otherwise, if I can print something that's already done for you, maybe, and read something to you, then you might even be confused more. Thank you for that. Where we were on transaction 6, bought equipment on credit from Batman for 12,000. So the debit assets, because now we've got an equipment, it's furniture. You see now, I'm calling furniture equipment. And liabilities are credited. So you do it on the side, it is add. Let's start with furniture then. Furniture is a debit. Furniture is a debit. We said we're going to debit furniture. Let's debit it then. Said we're going to debit furniture. Let's debit it then. I think this is where we were. Yes. So we said we're going to debit furniture with trade payables. So our furniture was 12,000. See, we've debited furniture with 12,000. Let's go back again. What did we say? We said, yeah, we've debited furniture. We said we're gonna credit liabilities. These are accounts payables. Trade payables. Account payables or trade payables, it depends. How do you? Or the Batman. So we said we're gonna credit here. This is a credit. This is the amount to be credited, you see. This amount to be credited 12,000, which you said is trade payables. Let's credit that amount then of trade payables. Let's trade it. I'll change here to trade payables. So you said you're gonna credit trade payables with how much? With 12,000. Remember, we're dealing with 12,000. Is this 12,000? What is the contra account for this? This is February. These dates. You'll get a properly prepared one. That's February 6. You'll get a properly prepared one. 12,000. So we've credited it now. And so it means we are done with what we said we are gonna do. 12,000, 12,000. Just wanna see. I have to slow down so that I do not end up mixing things up. Then, yeah, this was expenditure. Then now we move to the next transaction. Services rendered. So we are done with this 12,000. I just want to see if they will take care of it. Yeah, services rendered now. On 9, services rendered. 8, is it 8? So this is 6. This was 4. This was 4. This was 6. And now we are on 8. Services rendered, Rootman. Services rendered. So with services rendered on credit, what happens if a business renders services? The first thing that increases, does assets increase? Yes. On the increase where? On the debit side, which is 30,000. They increase with 30,000. So which asset does increase? Trade receivables, which is or R Rootman. Trade payables increased with 30,000. Trade receivables increased with 30,000. Then now, which what else got affected? Its owner's wealth increased with 30,000. So if owner's wealth is on the credit side, so you increase it on the side it's adds. You see, assets on the debit side, you increase it on the side, you debit the increase on the side that is add. So equity is on the credit side, so you're going to increase it on the credit side. You can write this maybe if you are doing your things. And what account of equity increases? Is it capital? No, because this is not an owner. So it's services rendered. Services rendered. Let's we start by saying we're gonna debit trade receivables with 30,000. Let's debit it then. Trade receivables. Let me see if you've got trade. These are trade payables. I have to make trade. Let me see if we've got trade receivable. Trade receivables. So let's now open an account. So of trade receivables. So in fact, this was trade payables. Now we're gonna have as trade receivables. Let me see if there's space here. Trade receivables. So these are now trade receivables. Remember, we are changing. So this is trade receivables. So we copy something there from top. So it's October, no, it's February. It's February, what date is it? February 8. So what is the contra account? This said, just to remind you, this said you're gonna debit trade receivables with 30,000. Remember, assets, debiting. What's the account? Trade receivable 30,000. Let's debit it then. I wanted you to see the full picture to say how does this thing end up working. So let's put the amount first in 30,000. What is the account? That is the contract account. I want you to see it. Services rendered. See, this is the contract account. Services rendered. Services. $30,000. Then let's open the account for services. Let's see if we have an account for services rendered. Service fees, or yeah, it's service fees. See if we have service fees. No, we don't have an account for services rendered. Let's open it then. This is service fees. Fees. So here the contract account is trade receivables, which was changing the accounts, 30,000. See, I hope you can still see. So we were taking this to the ledgers. This is services rendered. We said we're gonna increase the owner's wealth with 30,000. Which account? Services rendered, and which we credited. We said we're gonna credit, and we have just credited services rendered. And also, once you've debited to credit, you can't debit and debit. Then now on 12, made an EFT to G Goodman for private use. Also, just in accounting, when you're dealing with whatever you're dealing, you must look out for the amount for private use. But I want to deal with it step by step. So now, an EFT. If you make an EFT, this is 12. If you make an EFT, what happens to the assets? They reduce because you are paying how much? 1,000. So assets are reducing. Assets are reducing with this 1,000. Okay. Which asset is reducing with 1,000? It's bank. Bank is reducing with 1,000. Yeah, bank is reducing with 1,000 because now we are reducing assets. That's why I want to remind students. When the asset reduce, it's on the opposite side, which is a credit, because it's reducing. You can't reduce it on the debit side because that's where it's at. So you reduce it on the opposite side, which is credit. See, remember that's how now you decide whether are you debiting or whether are you crediting. That's why some students normally ask, how do I know whether should I debit or credit? You decide based on where is that element at. Is it on the debit side? And you would have written it down. So like here it's bank, it's asset that is reducing. So if it's reducing, it means it has to reduce on the opposite side. It can't reduce on the side where it's at. So bank. That's where we are reducing the asset. Now, what does this affect? Does it affect the equity or liabilities, or is it an expense? It's a drawing. Okay, what does it affect? If the equity, capital and drawings are the owner's account, so then there is income and expenditure. So now owner's wealth is reducing because he's taking now from this 50,000 he put in. So now he's saying, no, I'm reducing now what I put in. I'm taking away 1,000 now. So it's gonna be on the credit side because it has to reduce that 50,000. Then what account now? It's gonna be credited. What account now? It's gonna be. In fact, that's why I was 1,000 is credited, which is bank. See, I've got this thing written down, but because you say I'm teaching as well, it's bank here that is credited. You see, it's credited. The account is bank. So which account is now debited? It's drawings. Drawings. If you like, you can write that down. So that whenever you meet drawings are not an expense. You see, a reduction in the owner's wealth. Don't mix drawings with expenses. That's why we didn't maybe debit. We did debit equity, but even though they debit like and you see on this is a rental expense. We debited. Yeah, we are debiting it, but it's not. Even though it debits, but drawings are not an expense. When you do an income and expenditure, you don't put in drawings. Drawings, the person is taking from his money that he puts in. Then let's look at the next transaction now. On 16. Oh, now we start we're gonna credit bank. Let's credit bank then. With drawings. The contract account 1,000. Let's open an account for drawings then. Let's open an account for drawings. So when you already have an account, you don't open another one on top of an account that is opened. So this account we're gonna call it drawings. Set, it's already there. 1,000. We said yeah, we're gonna debit drawings. What did we say? Yeah, we said we're gonna debit drawings. Yeah, amount debited 1,000 drawings. See, that's 1, 2, not lost. See, this is this transaction. You are taking it down here. Then we are then moving now to the next transaction. Made an EFT payment to Batman in part payment for their account. Now we are now paying. So the moment we are saying we made a payment on 16th, the moment you're saying, well, we made a payment, so it means that affects what? The assets. So if assets are affected, they are affected on which side? On the credit side, because they are reducing on the credit side. So 5,000. We are now paying. Where is so this is an amount to be credited. So which account we're gonna credit is bank. See, we are crediting bank with 5,000. Then now, what else is gonna be affected? Is it assets or is it owner's equity? No, we are paying. Remember, that's Rootman. Is it Rootman? Batman. Yeah, this is Batman we are now paying. Is this account of Batman we are paying off. So, have to leave some. No, let me not leave space. So this amount is trade payables. Just want you to, so that you don't lose this amount. What we are trying to do here. This is admin. Trade payables. Trade admin. So we paid the amount. So it means we'll reduce liabilities, because now our liabilities are reducing with 5,000. Then now, which account? Our liabilities are on the credit side. So when we reduce it on the opposite side. So always look up on top. Where is it? So we are reducing 5,000. We reduce it on the credit side. Which account are we debiting? Right, debiting trade payables, admin. Yeah. Which is this admin. Now, that's when I think then you'll then be able to see something else now. Okay, let's start with this bank. Let's start with bank of 5,000, which we said we're gonna credit. Let's credit bank with 5,000. This is the 16th February. Let's start. So bank, so when the contract account, you use the contract account, the opposite account is gonna be trade payables. Normally it's like trade payables. We include Batman so that you can be able to follow to who does this transaction relate to. 5,000. So we said we're gonna credit bank with 5,000. See, assets. Then we said we're gonna debit liabilities, which is Batman with 5,000. Let's debit liabilities now of Batman with 5,000. These are trade payables. These are trade payables. So we said we're gonna debit trade payables with the contract account is bank. We have 5,000. Then now we are coming to the end of these transactions, and they are repetitive. Then you see that yeah, they are repetitive. You see that maybe if you didn't catch the first transaction, you will catch the next transaction. Let's now look at the next transaction, which is services rendered for cash. See, I'll be quick here because we've already done this. Something like this. It's bank. Assets are gonna, so here the assets are increasing. You render services, assets are on the debit side. So 7,000. Which asset that are we debiting? Remember, on this side it's a debit, it's bank. Then what this affects as well for when we render service, does it affect liabilities or equity? Owner's wealth increases with 7,000. Which side is owner's wealth? It's 7,000. It will increase on the credit side. 7,000. Also, remember, owner's wealth is made out of capital and income and expenses. So we were having bank service fees. 7,000. So now I'm not going to highlight because I think you now know how it works. So bank, you said you're going to debit it. With services rendered. 7,000. And he said we're going to credit services rendered. We've got services. Trade payables, trade. Got service fees. So we're gonna credit service fees. Bank. I think it should go a bit faster now that you see that doing what we said we're gonna do. We said we're gonna debit bank. That is this debit. We said we're gonna debit bank. Then we're gonna debit bank, of which we've done, and then we're gonna credit services rendered. Then now on 27, yeah, April. That is what? No, February. 27 February. Rootman, we receive 1,300 from Rootman. So now, if we are receiving, so it means this is a debit side on assets. Assets will increase if we are receiving. We are receiving 1,300. 27. So we are receiving 1,300. So which account? So this is assets. Which account gets affected when we debit and receive is bank. It increased with 1,300. Which other account now was affected? It's trade. Does this affect equity or liabilities? No, it affects other assets. So now trade receivables will be affected. So we're gonna credit trade receivables. Trade receivables, which is these trade receivables. Just want to show you. We render these services here. Now we are receiving money for it. So now this 30,000 is going to, it has to reduce now. But you'll see as we will be reducing it. So now it means you have to, it's on the debit side, this 30,000. So it means you have to credit it. I don't know if I can enlarge. Just want to see if, because I need to enlarge here a little bit. So, yeah. You see, yeah. So, so this, it's 1,300. I'm writing while I'm talking, so that's why sometimes I don't. So we said we're gonna debit bank this amount, 1,300. Let's debit bank. So these are repetitive. So the contract account, it's trade receivables. If you've got questions, you can be posting them now, because we will close off these now. So trade receivables is 1,300. Then we said we're gonna credit the assets. The assets, we're reducing these assets now. So trade receivable is an asset of 1,000. So we're gonna credit it. So also you will take time, your own time, and then you follow the video. Where I trade, here it is. We said we're gonna, so the contract account is paid 1,000. Then now the rest is only payments from the bank, which I will quickly run through. So we're dealing with 1,300. Now these are EFTs, wages. which is the reduced asset, 10,000. Which asset gets reduced, which is credited? Because if it's assets reducing and gets credited, it's bank. And which other? What are we gonna? What is the contra? Just want you to see the difference here. This is bank. That is being credited. See, it's on the debit side. So because it's reducing, it's going to be credited. So it's gonna be credited. What is the contra account? It's gonna be salaries, which is an expense. So what are you debiting with the contra account? You are debiting the owner's wealth. So what else? If you're paying salaries, owner's wealth reduces. So let's debit this bank then. It's salaries. We are crediting bank. We said we're gonna credit bank. You see, debit credit bank on the credit side. It's on the credit side. So we're gonna do it with salaries. 10,000. Then what is the contra account? You need to open a salaries account. I don't think we've got a salaries account. To take salaries account. So the salaries, we said it's gonna be 10,000. Contra account is bank. That we just done with 10,000. The next two account, it's wages for 2,000, which is gonna be more or less the same thing. Next bank again, the same way. So 2,000. And it is, so what are we gonna credit? So here it's equity, which is the owner's wealth. We're gonna credit it. We're gonna debit it with 2,000. So because the owner's wealth is reducing, let's do that then. Wages. This is 28. Which is it's gonna be 2,000. And then let's have another account. Then I will so these are wages. So what are we gonna? The contra account is bank. Remember, is this 2,000? We said we're gonna debit. It said reduction in the owner's wealth. Gonna be 2,000. Then now the last transaction is telephone expenses. Last transaction is telephone expenses. So it goes the same way. It affects bank again. Affects bank. On the assets. So assets on the debit side, they reduce on the credit side. So it's 500. Bank, 500. So they are on the credit side. So which account is reducing is bank. And then which, same like salaries, the name of the account is telephone. So before I add, then if you've got a question, but that's if you've got a question then. you can copy it there. I'll ask Tejo to tell me if there is a question. So, before I close off these accounts, which is 500. And then let's see the account that we are having. It's at wages. Then is this telephone? Telephone, yeah. Telephone 500. It's a coincidence. 500. All these, I think I'll have to. Let me see. Salaries. Yeah. So all these I'll have to delete. So therefore, is there anyone who has a question?
Not yet, sir.
Okay.
Let me refresh.
Then let. Can check on charts as well. So we are.
Yeah, no, there's no question. There's no question, sir. You
There's
may
no
proceed.
question. Okay.
Yes, sir.
Then let's add now. Yeah, let's close off. Which account, which side? I left it around, I see now it's 8. Maybe in the next, this will finish up in the next 20 minutes or so. So I think around 15:15. Which side, when you do this, you check which side is bigger between this debit side and this credit side. You see? So if you add 50,000, 7,000, 1,300, you're going to get 58,300. Then you put that here again, 58. Now, when you calculate the balance carried down, you add this side. Yeah, managed to. Yeah, so now when you do the balance carry down, you see, so that this side, because this doesn't balance, let's add this side then. Then you're going to have 8,000 plus 1,000 plus 5,000 plus 10,000 plus 2,000 plus 500, which is equal to 26,500. Then, so that you can balance these sides, remember you said this is 58,300. You're going to say 58,300 minus this 26,500. Then you're going to get the balancing figure, which is 31,800. This balancing figure is what will make your ledger account to balance, which is 31,800. If you add all this, gonna give you 58,300. Yeah, should give you 58,300. This is a balance. Get it down. This is what you take to the trend balance. And also, one of the most important things with accounting is just for you to see the full picture. 31,800. This is what you take now to your client balance. And we do the same thing. Capital, it's no story, it's 56,000. So we used to do that, carry downs back then in the 90s. Rental expenses, it's 8,000. So you don't add where there is only one item. And about furniture. So we've got just one, rental expenses. Then furniture, you leave it like that. Trade payables is the same thing. You'll see it better here. You have 12,000 here. And we are balancing with 12,000 here. So what is the balance carried down? Carried down. It's the difference between 12,000 and 5,000, which is 7,000. What will be your balance carried down that you take now to your ledger, to your trial balance? Balance brought down. It's gonna be 7,000, 7,000. See, these rates, we are taking them to your ledger, to your trial balance. And in this name that it's in here, then we move to the next one on trade receivables. Trade receivables. Same thing. You have 30,000 of trade receivables. We are about to finish now. I'll just have to, in the next 5 minutes, transfer this to the ledger. If you've got a question with these, then you can be asking in the meantime. Again, which is the bigger amount here? This one is 30,000. It's easy here. Which one is the balance carried down? Balance carried down, it's gonna be, no, it's not. It's not gonna be this side. See, I'm talking and I'm multitasking. Balance carried down. Okay, yeah, before you even have the balance carried down. So the balance carried down is what will balance this amount, which is 28,700. Where you said 30,000 minus 1,300. Then you're gonna have balance brought down there. This is what you're gonna take to your trial balance, which is 28,700. Balance. Then now, what's next? We have services rendered. Services rendered is 37,000. You only add one side if there's zero on the other side. As I was saying, that you used to add even that side back then. But now it's no longer done. Then just want to. Then we have equipment. Equipment, it is the way it is. We have drawings, salaries, wages, telephone, expense. Now, I just want to. Now we are just transferring this to the trial balance. Just transferring this to the trial balance. And then once we've done that, we'll be done with today's exercise. Just wanted to have different screens. So remember the balance brought down, the first balance brought down. bank. So if you've got questions after this, we are closing. And the other chance we'll have it tomorrow because something came up. So now this is on a debit side. You take bank as it is on a debit side, 10,000. This is a trial balance. 3,1,800. 3,1. Switch. 3,1,800. 3,1,800. Then this was the purpose. Capital. Goodman. See, this is 56,000. Now that I'm using like see 2 screens, so I don't have it full, but I think you'll see these are the ledgers we're doing. Yeah, so I'll set up the next class for tomorrow. Also, I'll send you the link for tomorrow at the same time. I will send you, I think there's a lecture evaluation form. Then you move on to the next one. It's equipment. Sorry, this is not the same page. Like these are different pages, so I've made it half. In case maybe you are wondering. Equipment, it's how much is it's not a capital, it's rental expenses, not but that's it's rental. Let's follow the rental expenses. So I've made the announcement while doing this, which is 8,000. Then we have furniture. What's next? So it's rental expenses, furniture. Oh, where was I right? Furniture. Furniture is 12,000. You see, these are the amounts in case you're not sure where am I taking these amounts from. It's finished. So I've minimized this. Then what next? Remember the balance, carry down off. Then we have trade payables. 7,000. Remember, this is Batman. So just wanted you to see the bit of a full cycle to say where are these debits going? What's the point with them? And then what's next? Trade receivables. If you don't mind, can you add debits in the meantime so that when I ask, I've got the answer, I've calculated so that we check it. Is it also this is trade receivables? Another person must add, and then you'll put on the chart what you would have added, 28,700. See, and the side that is brought down at is the side that you're gonna take it straight to you don't change anything once you do that. Then we have service fees. See, these are service fees. So one person is adding I don't see where my service. Yeah, here are my service fees. 37,000. Try to make you see where am I taking these amounts from. Service fees. It's 37,000. One person is adding the debit side, another person is adding the credit side. Then we move equipment. Equipment is on the debit side. So you don't add. And then we move drawings. Yeah, drawings. which is 1,000. The only debit side. Here it is, where I'm taking this from. Then we continue. Salaries. I close them off now. Salaries, here it is, 10,000. Then the last one. Oh, it's not the last one. Salary is 10,000. Wages. One before the last one. See, wages is 2,000. From the side where it is, 2,000. Then telephone expenses. 500. This was big. I think there must be something I must have skipped or something. Let me see. Why is this thing like this? I'm not sure if I've duplicated an amount, but so this. So now that was telephone. So it ends there. You can add. I'm also adding.
Mr. Khanyeza, sorry for interjecting.
Yes, sir. Did I duplicate an amount?
Not necessarily. Moiketsi is saying that, just hold on now, my screen just went blank. Oh, no, it's fine. I think she deleted the question because my screen is blank now. Yeah.
Okay. Yeah, so it means once we have done this whole thing from source document to trend balance, this should be 100,000. This should be 100. And now also I'm having load shedding. At least we've pushed, we're about to finish. That's it then for today. Tomorrow I'll send you a link. It's also at we're doing accounting cycle that tomorrow. You see, my computer might go off anytime.
Yes, sir. Sorry about that. When answering the assessment questions, should we put 0 or not applicable in blank spaces?
In what?
So in blank spaces, should we put 0 or not applicable and /A?
I know. I'll have to ask my colleagues. Can you drop that into the chat? I'll answer it tomorrow because I haven't been involved with the assessments. So you see what we've done. We've moved from source documents. These were just deciding what are we debiting, what are we crediting, and then we put that to the ledgers, and then also lastly we then put it in the trend balance. From the trend balance, it goes to the financial statements, balance sheet, and something like that. Yeah, I think I just have to see what's the time now. For 9:13, that we're able to manage time. I think if there is no question, therefore, especially also I'm running out of power, then I think that should be it. I don't know if you can check for the last time. Then that should be it. We'll see tomorrow. We'll see each other tomorrow. Then also remember the lecture evaluation forms. Please complete for me the lecture evaluation form. It will be coming with the link. So it means that I have to charge. Once the receipt comes back, I'll send it.
I think we lost Mr. Khanyeza. So in his absence, all the recording and the study materials will be shared on my UNISA. And please, if you had any other questions, since we'll be seeing him tomorrow, please just make notes of it somewhere and then we can bombard him with the questions. Okay, bombard is not a nice word, but we can share the questions with him. From my side, thanks a lot for today. Keep well, and I will also make sure that he shares the recording with you. Yeah, thank you for joining, and thank you for making